What is the SBA Surety Bond Guarantee Program? The SBA Surety Bond Guarantee Program allows small contractors to qualify for surety bonds on projects with a total project cost of up to $6.5 million. The SBA provides set-aside programs for minority-owned businesses, the ability for contractors to obtain bonding on larger projects, and for up-and-coming contractors with credit blemishes to establish a bonding line. So why do contractors need to purchase bid, performance, and payment bonds? In 1935, Congress passed the Miller Act, which requires contractors to obtain payment and performance bonds prior to beginning work on all qualified federal public works projects that exceed $100,000. Some states have enacted what is known as Little Miller Act legislation, which follows the guidelines of the federal legislation, but on a state level. So how does the SBA Surety Bond Guarantee Program work? The SBA guarantees payment of up to 90% of losses sustained against all bonds issued through the program. This guarantee provides an operational advantage to surety companies as bonds backed by the SBG program minimize the surety company's exposure in the event of a claim. The SBG program will not cover bonds with a limit higher than $6.5 million or $10 million if a federal contracting officer certifies the bond. So what are the benefits of the SBG program? The SBG program allows contractors to bid on and undertake construction projects they would not be able to qualify for on their own. Most standard market underwriting requires contractors to have 10% of the bond amount in working capital to qualify for a bond. The SBA, however, reduces that amount and only requires contractors to have 5% of the bond amount in working capital. Additionally, the SBA allows for any unused portion of a contractor's bank line of credit to be counted as working capital. The program also allows for in-house financials for projects up to $2 million and a CPA review for projects up to $6.5 million. So who qualifies for the SBG program? The SBA will only provide assistance to contractors who are not able to obtain a bond without the assistance of the SBG program. The SBA will examine the following criteria when determining a contractor's program eligibility. The contractor must need a bond as a prerequisite for bidding on or performing contract work. The contractor must be unable to obtain a bond without the assistance of the SBA. The contractor must be fully responsible for the oversight and management of all subcontractors and needs to perform at least 15% of the project in-house. All owners with at least a 20% ownership interest in the contracting company must prove they are not currently debarred, suspended, proposed for debarment, declared ineligible, or voluntarily excluded from transactions with any federal department or agency. To qualify, general contractors must have $39.5 million or less in annual revenues, while trade contractors must have $16.5 million or less in annual revenues. SBG applicants must prove that they are of strong moral character to be eligible for assistance. The SBA will examine factors such as the contractor's criminal history and history of bond claims when determining the contractor's moral character. The contractor must demonstrate that they are able to successfully complete the project that the bond is being applied for. Generally, the contractor would need to have completed a project of at least half of the size of the project that requires bonding. Additionally, the SBA imposes minimum requirements dependent on the size of the project. These requirements can be pretty extensive, so viewers are encouraged to check out the article linked in the video description to learn more. So how much does an SBG program bond cost? The SBA charges a fee of 0.6% of the total contract price when guaranteeing a bond. In addition to this fee, contractors will also need to pay a premium on the bond, which will generally range between 1% to 3% of the contract amount. Here's an example of the cost of a $500,000 SBG program bond. Viewers are encouraged to pause the video here and examine the premium rates associated with the bond. So how can an insurance agent obtain an SBA Surety Bond Guarantee Program bond for their customer? Bond exchange makes obtaining an SBA Surety Bond Guarantee Program bond easy. Insurance agents need to simply log into their account and search our database, using the keyword contract to find their bond. Don't have a login? Enroll now by going to bondexchange.com and clicking on that big blue Get a Login button, and let us help you satisfy your customers' needs. If you enjoyed this video, make sure to subscribe to our channel as we post weekly content helping insurance agents effectively obtain surety bonds for their customers.